Hey guys, welcome back to the channel where we're selling options until $1 million. As you can see, we are slowly clawing our way back up from a little bit of a rocky start at the beginning of February. The current account value sits just over $270,000. Friday was a nice and green day, getting 1.1K up on the account. So there was this big dip at the beginning of February, and that was due to increased market volatility with potential war with Iran, with the AI Claude AI tool coming out that potentially will lead to all the major software companies becoming obsolete, and as well as other market volatility with the U.S. government shutdown, as well as other news headlines, kind of all coming in all at once, which led to a pretty big market fall. At least in my portfolio, that's pretty exposed to tech, but nonetheless, we're coming up from a strong year in 2025 where we were up over 15% or made $42,000. So the current numbers for 2026 is that we are still down a little over 12 grand or 4.59%, but this last week up 4.3K or 1.59%. And this was a pretty eventful week because this is when all of my monthly options expired. Got assignments on a few, but just to hit the major ones, CRDO, two put options, 1360 realized profit, but we did get a sign right at, which we'll get into later in the video. Talon Energy put expired, $1386 profit. And then BitX, two puts on a leveraged Bitcoin ETF product that we did get assigned, so we had to buy, but we'll get it all into that into the later in this video. But the total for this week, $4,656 profit, cash into the pocket. So good to see that. So again, what is the wheel option strategy? The wheel option strategy is where we start at the top and we sell put options. And this week I wanted to actually give a live example of one trade that I'm thinking of doing, to a nice visual example of what it means to do the wheel and how to start it. So this is just my brokerage, Fidelity. I go and I am looking at the ticker symbol Flex. Flex is a company that manufactures hardware components into data centers. It's a competitor with a channel favorite, Celestica. So they manufacture switches. Even though Celestica has a larger market share, Flex is also benefiting from the huge AI rush and goes into my strategy of selling the picks and shovels for the current trend. So I go into Flex, currently trading at $65.68. I select the put, sell to open. We don't buy options. We are selling the options or writing them. Expiration March 20 in a little bit in a month. Choose your strike price. I choose the 60 because I'm happy owning the stock at that strike price if I get assigned. So 1 month out, I chose the mid price, so $1.33 per share, but we times that by 100 because every contract is 100 shares. So that's $133. You put up 6,000 in collateral, and you get 133,000. Or whoa, that would be nice if we get $130,000. You get $133 for $60,000 in collateral, and if I just calculate that, let's see what I'm using my phone just real quick. I have a rule on this account where I don't sell options if they don't yield at least 1% a month. So 133 divided by 6,000, so it's 2.21%. So this roughly, because March 20 isn't exactly in 1 month, but this will yield me 2.21% monthly return, or about 25% annually, which is a nice return. So that meets my strategy of at least 1% a month rule. So anyway, we sold that a month out. Let's say in March 20th, it drops below $60. Flex is not trading at $66. It's trading at 58, 57, lower. Then I would have to buy 100 shares at that $60 strike price. Then we're going to turn this around and sell to open the call until it goes up above the strike price, and then just restart. And that is the overall wheel strategy. So going into this week on some news and headlines, the Supreme Court made a major decision which ruled Trump's not all, but most of Trump's tariffs as illegal. And this did not make Trump very happy, and he first increased global tariffs to 10% and came out saying asking, reporters are asking what's going to happen, all the money that the tariffs have brought in right now. And Trump said it's going to take years and years of court battles until that money is released. So in the meantime, he also came out and did the 10% global tariffs. And then just yesterday, Saturday, Trump came out and hiked them to 15% effective immediately. So we'll see. Futures are not open yet. It's 3 p.m. as I'm recording this on Sunday, February 22nd. But we will see how this affects the markets and how the markets react to it once pre-market futures trade open at 5 p.m. and that's Central Time. So eyes on that. And then another big headline is the next U.S.-Iran talks will be held on Thursday in Geneva. So there is a huge military buildup. You've probably seen this in the oil markets if you've been watching, and the price of crude has shot up, and volatility. I mean, this is also fears on World War III and a large big war that the U.S. might be in again. So this is creating volatility. VIX is spiking. Markets are fearful. So something to keep an eye on. But Trump also came out and said in the next 10 days, we will know whether there is a war with Iran or not. Hopefully not, but keeping an eye on that as well. Then the meme of the week, you get a tariff, everyone gets a tariff. With respect to the hike to now 15% global tariffs, effective immediately. So anyway, going into the portfolio, Celestica, a channel favorite, one of the picks and shovels plays the AI data center boom. Celestica manufactures, the hardware manufacturer for the hardware components into data centers, mainly the switches. They own about 60% of the market share. And through the past, couple of months, it's been a nice, monthly to weekly trade, buying here on the bottom once it dips to in the 270s, 260s. I've been selling the 260 put, 250 put. If I want to be a little less aggressive, this past week, we sold a 250 put. So put up $25,000 in collateral, held for only 3 days, sold on that Friday, sold the put on the Friday, and then realized the put, closed it. So it's the opposite. If you're selling puts, you sell to open and then buy to close, unlike buying options and selling options. So a nice 4-day close, $605 realized. Even though this looks like only a few candlesticks, this is a $30 move. I mean, that's a lot. If I owned 100 shares, that'd be $3,000 moved. So happy to realize the contract at about 60% profit or $605. So we'll continue. Celestica has been pretty range bound, so we're continuing to trade the range and collect weekly profits. BWX Technologies. This is a company that produces a lot of nuclear components and provides services to nuclear power plants. So this is one of the power plays that I've been doing. I wanted to get some exposure to the nuclear industry, but the uranium stocks have gone just so far up, and so has all these hype nuclear reactor stocks. That I'm like Fermi, that I'm not comfortable owning and that don't have a proven model. But BWX Technologies does have a proven model. Earnings have been good, and the stock matches my criteria. So this has been a 1-month hold. It did dip below my strike price, sold a 195 put right around that 90-day SMA. I mean, it did dip below, but a very strong bounce right back up, and it's trading again in the mid to 200. It's trading at 206, so in between 200 and 210, that midpoint around there, which has been nice. So I think it will make a new move up, and it will go to the 220s and above if the market volatility doesn't affect it too much. But I'm not trading it because the earnings are coming up. But this is one company that I was happy owning, but also happy to not get a sign and collect my $450 in a 1-month hold. So again, that was a full. I held the contract fully to realization. So if I just type in my calculator here, 450 divided by 19,500. I mean, that's a 2.3% monthly return. So meets my base rule of at least 1% a month. But as you can see, we are playing it a little bit more aggressive. We're selling contracts that yield 2% plus a month. So we're not going for a measly 12%, even though that is a great return yearly if you can do it consistently. This year we're taking on a little bit more volatility and going towards the 20+% return. So We'll see if the market rewards the risk or if it punishes us. But everyone have your own risk tolerance. None of this is financial advice. Please consult a licensed financial professional and do your own due diligence. Don't just follow me blindly. So then again, another channel favorite has been JP Morgan Chase. We've been trading this the last few videos, mostly weekly trades that have been closing the contracts at 50% plus profits. So if again, if a contract is 50% profit and there's still 3 weeks left, I might as well close it and deploy that money elsewhere because it's not very time and capital efficient to keep that contract for 3 more weeks. So JP Morgan was one of those cases. It's been having some volatility with a ruling on a Trump case, disclosing Trump's financials, and then also Trump ruling on, or not ruling, but he's been saying that he wants to cap credit card companies' interest rates on credit cards. So JP Morgan did get affected by that, and that was that big drop in January and early February. And we've been trading it ever since because even though credit cards are a big portion of JP Morgan Chase's revenue each quarter, they're a massive financial institution and they'll be just fine. So trading these ranges, this was only a 3-day hold, also $436 realized, selling that 295 strike price. So right at that long-term support level that it's been bouncing off of for these last 6 months. So keeping an eye on JP Morgan, if it dips again into the 300s or below, might be an enticing opportunity. So Talon Energy, this was a full month hold. I mean, I just couldn't resist. It dropped 4% on that green arrow day in late January. And I sold a contract for 1386 and realized it fully, and it did dip below the strike price. I mean, it went all the way to the I think the 310s or 300. So if you bought down there, congratulations. I really wanted to. I mean, Talon Energy has been having a super strong financial profile. They provide energy to all this boom on data centers, but also these semiconductor plants in the U.S. and the domestic manufacturing rebound that Trump has been trying to bring back to the U.S. That is also taking a lot of energy. So Talon Energy sold the 345 put. As you can see, it did dip below, but I couldn't sell another put contract because this is a higher price stock. I mean, just this was $34,500 in collateral, to make about 1,400. So it matches my 1% rule. But if I did get assigned on 345 and I got assigned at, let's say, 300 or 310, that would break my diversification rule. That would be too much concentration in one stock overexposure. That is not good. I try to limit that. So unfortunately, I could only play one contract on this unless I have a bigger account size, which hopefully one day I will, because as you can see, this was a missed opportunity. But still very happy with the one contract that we realized. I was not scared when it dipped below 345. I was very happy to own the stock at that 345 level. And then it absolutely ripped, which is sitting right above the 90-day SMA. So keeping an eye on this. If it touches the 90-day SMA again, or seeing how price action reacts, I might actually no, I will not play because their earnings are coming up here in a few weeks, but maybe post earnings. So keep an eye on earnings and see how they do. Maybe play options because again, one of the rules on the channel is that we do not play options through earnings. Too much volatility, even though there are increased premiums. So going into current portfolio, Credo Technology Group, this is one that we actually got assigned. We sold 2 put contracts on these red days at the end of January, held the full month on February 20th, so last Friday, realized 1360. So that does put our cost basis down in the high 110s, but the stock is currently trading at 124. So even though we are above our cost basis, their earnings are in 1 week. So I might sell a few call options, realize some premiums that happened before their earnings call. Their earnings happen technically in 2 weeks, but it's, not in the next week, but the next, I think it's next Tuesday. So their earnings are coming up, which, if those call contracts that we sell 1 week out expiring this Friday don't get exercised, we might be holding the stock through earnings. But Credo Technology is a company that manufactures specialized wiring for data center that is very power efficient. You know, unlike fiber optic cables that are based on laser technology. Lasers generate heat. Heat reduces, you know, takes a lot of power. These data centers are very power constrained, so they're trying to find the most energy efficient components to put in their hardware. And this is one company that has been benefiting from that. It's just had insane growth. So all eyes on earnings there. So this is one I'm a little bit more comfortable with holding on earnings, but also one that can get affected by the hyperscalers and the news that comes out with the AI fears. You know, this could be one of those companies part of the bubble, but I like them because they're producing. They're a part of the picks and shovels plays, especially not like the companies that are direct AI companies. So I like this company. It has been having a nice, even though it dipped below the 200-day SMA, trading below the 90-day SMA, its short-term support has been bouncing off that 200-day SMA, that green bar there. So an RSI in the mid area, it was oversold and a strong, nice back. So if you somehow did get into the stock in the 90s, congrats. I got in the high 110s. So that is my cost basis, and it is now part of the portfolio. So I have high hopes for this one, but we'll see if I end up holding through earnings or not. And Constellation Energy, this is another energy stock that has had a pretty good rebound so far after hitting, I think that's the 230s or low 240s in February, about a week or two ago. We were down, you know, this was a stock that we were down massive on, I think about 6K. And then now we are down about 3K or 9%, and it's been having a nice rebound. So this is one that I'm not worried about, but not selling covered calls yet on it because I think there's still room to run. But once it hits the 320s, we're going to start selling covered calls. But we got to sign at that 335 area. So been holding the stock for about a month. Maybe this will be a 2 or 3 month hold in the portfolio, but hopefully some nice profits coming up on this one once it gets back to its 300s area. So again, this is what the portfolio is looking at. Some stuff that I didn't cover is I have been selling some SoFi puts. I don't have any shares, but on the previous video assignments like Robinhood, Reddit, Palantir, you know, they've just been trading a little sideways. Reddit had a nice day on Friday, plus $400, but not much, not as strong of a rebound yet. Just kind of trading sideways after a big drop in their share prices. And then BitX, I didn't cover apart from the very beginning. This is a 2x leveraged Bitcoin ETF product. So we did get assigned, had to buy about $2,500 of BitX. So holding that now, adding that to the Bitcoin. So all eyes on that if the crypto winter is slowly coming to an end or if it rebounds. So again, cash available is a lot because a lot of our majority of our monthlies expired. So we're sitting on about 40% cash right now. So again, all eyes on how pre-market features and how the market reacts to the Trump escalation hike of global tariffs effective immediately to 15%. So if the market starts tanking, I do have cash to deploy and hopefully take advantage of some nice opportunities. So that brings this video to an end. We are sitting at just over 27% of the way there of our challenge. So I appreciate all of you tuning in to this week's video. Good luck trading, and I'll see you guys next week.